Hey, Urgent Alert traders, Wiz here with your Urgent Alert trade for the week and also a portfolio review along with our adjustments. Yesterday afternoon, I did a live training session after the close for potential new members. You can watch the replay here, go.topgunoptions.com/FT-replay. Now, I'd fast forward to about the hour point, right around maybe 55 minutes. That's where I start talking about the bear call spread that I sent out via text after the close. I got filled right at the open with a little bit of a rally there. What did I get filled at? $1.35. So it's actually the trade's looking pretty good. It's up $450 so far, so that's a nice looking trade. And let me just open it up here, analyze. I'll put it in the email. You've already probably seen what it looks like. I'm short 15 of the regular May expiration. Remember, the last day for us mere mortals to trade this would be. So it says May 17. Whenever you see the month and the year, it's the third Friday of the month. However, for these SPX options, the last day to manage this trade would be by the close on the 18th. So remember that. Can be a little bit confusing when you see May 17. Wait, does it expire that Wednesday? No, it's the regular May SPX expiration, which technically it expires with the first print, the first opening print of all 500 S&P stocks Friday morning. That's why I say you mentally remember that the 18th is kind of the last day to manage that trade. This trade was up as high as $600 a little while ago as the market's starting to the fade here. Make sure you watch the sit rep. We still have North Korea out there. We have the French elections out there. I know he's up by double digits, like in the 20s or something. Who knows? We've seen stranger things happen, but we're obviously, I don't think, going to rally into the close here. And I gave you my strategic mindset in that video yesterday if you want to watch it. But let's get started here. We're going to put a new trade on Amazon in here, but let's go through our existing positions. Have a couple Disney positions. This one's been on the longest. It's the Jan 18, 70-80 puts and calls. It's up about $4,300. Nice year-to-date gain. This is a good-looking trade. Disney obviously was in the news this week. And here's the Jan 19 trade. The answer is yes. Would you add a Disney trade today? Absolutely, if I didn't have one on. I'm long 5 of the Jan 19 85 puts and long the 87.5 calls. Let's just take a look at a chart on Disney. I mean, this thing's been all over the place. And there you go. Look at that. This was from last week. I said this is a very important line here. This 110. I'd even be looking at a bull put spread here on Disney to trade the front months. I'm not going to get into a massive discussion about the earnings and stuff like that. ESPN is just a crap property. I really do at the end of the day think there might be an Apple Disney tie-up. That's one of the reasons I'm long-term bullish on Disney. Remember, if you don't know what a long call diagonal is with a protective put or any of this stuff, remember under the members drop down here, underneath member content, click on the training videos, okay? Let me just hover over it. Down here in training videos, scroll down to, I think it's video number 7, Options Weapon School Session 7, long call diagonal with protective put. And also I review synthetic stocks. So that's a yes for Disney. I'm going to go pretty close to the money here. This is kind of a gap move to the downside. If we get half the gap back, and it keeps going, it's very, very bullish. If we get to about, 113, and it doesn't go through that, and it goes back down, it's a little bit bearish. But take a look at the 6-month chart. Wow. And then take a look at the 1-year chart. And again, I got into the Jan 18 trade right about here as Disney slid. I'm like, this thing's cheap. Well, it got cheaper. And then look at that run we've seen. So a lot of you, I know, either in the ready room or in support of, hey, great Disney trade. That's why I put another one on, even though it's underwater right now. We have a couple years for this thing to work out. So I need to sell some front month upside calls, 10 contracts here, 5 here. So I'm going to go options. Let's bring up options. I'm going to go out to the regular May expiration because, again, a week is a day is a lifetime in this market with everything that's going on. So going out, I'm just letting the leash out about 2 weeks. And let's do, man, there's a lot of premium in here. Let's give us a little bit of, go back to the chart here. I don't think we're going to be up by 116. I mean, if we, because we're stagnant here. Let's do the 114s. 15 of the 114s. I'm going to sell 15 of them, mid-market. and potentially over the next couple weeks bring in $1,500. This is awesome. This is exactly what we do. This is what this tactic is designed to do. We make money two ways: in a long call diagonal or synthetic stock. Obviously, the underlying going up and selling the front month upside calls. Okay, so Disney is a yes. Add here, do whatever you want, but I like Disney. Have two FXI positions. Okay, this is a Jan. Well, let me make sure this is. Let me group these. Let me make sure my grouping's good. Jan 18, short, and then these. Yep. Okay, good. So here is, let me click analyze. Here's a Jan 18 FXI trade. This is also a yes. I'm long-term bullish on China. I know we got North Korea issues, but for the first time in a couple generations of people, China is actually looking to work with us on this North Korea thing. And needless to say, they're going to be the world's strongest or number one global economy. So yeah, I like this. I'm long 15 of the Jan 18, 25 puts and 26 calls. And then this trade right here, this is up $3,700. This is a good example of synthetic stock versus the performance of a long call diagonal. So here's, I'm short puts and long stock with the same expiration and same strike. That creates synthetic stock. There you go. There's the P&L of long stock. Here's the blue line, and obviously, if I do synthetic stock at the 32 strike, at 37.64, we're very profitable. And disaster puts at 26. Let's take a look at chart of FXI and see how we're doing. A lot of volatility. Remember, and this is kind of a double bottom here. Look at this, there and there. This could be bullish if it gets airborne a little bit. So we have to keep an eye on it. We're trying to get off the mat here. Double bottoms are usually bearish, or I'm sorry, bullish. I'm not a chartist. I don't play one on TV. So I'm gonna write calls pretty close. Let's take a look at the maybe the 38.5s, and I think I have 15 contracts here, and then 10, so 25 total for my two trades. So let's go to 25. Yeah, there's premium in the 38.5s. Sell 25 of them. And there's no mid-market. I'll just go in at the ask, and there we go. Okay, next position in the urgent alert portfolio. JP Morgan. This is the apple of this portfolio, man. This is up 120. What's that? Open market gate, 126%. Beautiful trade. Up 20. Let's just round up and say $25,000 in 9 months. This trade has been so it's averaging what, $2,800, $2,700 a month in gains. I told you JP Morgan was a gift underneath 90. There's that 90 level. Nice recovery after earnings, and now we're just kind of chopping sideways. This 88 is kind of the noise level, maybe 80, 89. Let's see if we have some premium. So here are the two JP Morgan trades. This is a Jan 18 trade. And I'll just open, I get a lot of hell yes when we do live sessions because this is awesome. Long Jan 18, 40 puts, 42.5 calls. Now let's take a look at the Jan 19 trade. It's been on about 3 months, maybe 4 months. It's up $3,000. This one will get airborne as well and hatch pretty damn well. It's all the way out to Jan 19. This is a yes. I would add a JP Morgan long call diagonal, the protective put, to my portfolio today. 10 of the 60 calls and 10 of the 65 puts. So what's that, 20 total? So let's go to options. Out to the regular May 17 expiry, and I said the 88s, right? Yeah, let's do that. 88s, 89s. Now I'll do these. So we got 20, and there's no mid-market because the market makers are all at lunch right now having some tin sandwiches, bringing in almost $1,000 on front month calls. It's awesome. Renting out our apartment here. Okay, let's look at what's next. SPX, here are some hedges that I set and forget. These are the weekly options trades. Great weekly options trades. Hopefully you're in the weekly options model portfolio because we've got two kills this week. We have, in addition to the bear call spread that I sent out to you guys yesterday. So you're actually going to get two trades. The SPX bear call spread that I did yesterday for potential new folks. I also did that trade in AR, so that's why I'm going to add a new one today. Okay, so that's about it for SPX. XLF, again, this is, I'm getting this, it's down 165 bucks. It's a Jan 18 trade. I'm going to get this to break even and bail out of it. Even though my strategic mindset, my commit criteria on the financials is sound, I'd rather go with the single stocks. Of course, you have single stock risk with single stocks, duh, hence the term, and you diversify that risk out by using an XLF. But it's, JP Morgan ain't going out of business. We're not going to have another Bear Stearns or Lehman Brothers moment with a, Goldman Sachs or JP Morgan. So pretty confident in that. So I'm not, that's a no. If you're not in the XLF, I wouldn't be getting in the XLF. So let's go 15 contracts. I'm going to go pretty close to the money here. Right at the 24 strike, right at the money. I think we're, make sure you, like I said, you watch my, the Friday market wrap up today, because I think we're just going to wallow around here. Okay, new trade, Amazon. Take a look at, we nailed the sell on the news. I said Amazon, Facebook, all these guys, all the tech are flying high. When you see tech run this hard in the earnings, it's physically impossible not to sell on the news and to take a little bit of profits. I mean, look at that run going into earnings, and then it's time to fade. Again, if it 920 is going to be, it looks like it was a little bit of a resistance for a while there, and I think we're going to pull back to that. Okay, at Amazon's printing money, it's going to the moon, literally, or Mars, or wherever. The guy's brilliant. It's just, and it's not even, I don't even know what you call it anymore. It's not a tech stock. It's an everything stock. It's an incredible stock. But short term, it ain't for me. So let's take a look. My strategic mindset is bearish. Target is obviously Amazon. Commit criteria is post-earnings. Amazon is flying way high. I think there's going to be some profit taking. We get a little bit of the seasonality, sell in May and go away, hanging in there as well. And I'm going to take a look at about 14 bucks out of the money here. I'm going to do a bear call spread. That's our tactic, step 4. And we'll take a look at the tactical employment here. Edit legs. I'm going to sell. I think it was, let me just do the math here real quick. Amazon's been moving around, obviously. Was it 35 contracts? Yes. Okay, this is perfect. Didn't move that much since I started the video. Okay, so let me grab the screenshot and then I'll walk through the trade with you. And I'll put the SPX trade in the on the page as well. So AMZN. Threats to this trade. Obviously, the Amazon could wake up, have a rip your face off rally. Everybody reiterates their buy ratings, all sorts of stuff like that. I just don't. There's more downside risk in this market than upside. I think Amazon is a great long-term investment. I just think, again, watch the Friday market wrap up, because we're going to either chop or head down to the 50-day moving average, in my opinion. I'm going to sell 35 of the regular May expiration 945 calls. And then as a hedge, in case there is that rip your face off rally out of Amazon, we're long above 47.5, and that's where our bleeding would stop if this thing rallies. It's a 85.90 cent credit. So let's click create order. We'll go mid market. I'm going to click on analyze, and the first place our eyes look is always max potential loss. Always, always, always train yourself to go right here first. If you're not okay with that max loss, don't do the trade, or don't do 35 contracts, or whatever. This is based on me as a portfolio manager. I have an SOP, a standard operating procedure, that says I don't want to risk more than $5,000 on any one trade. A little north of that, but I'm okay. Now I can look at max potential profit and go, yeah, $3,000. We've been doing great with Amazon in our portfolios and trading the front months. Max potential profit is nearly $3,000 with using current at the money volatility. It's about a 63% probability of getting that max profit, and then a 64% probability of at least breaking even. Okay, so 85 cents, I'd go 85 cents plus or minus 10 cents. Okay, so I'd go all the way up to a 95 cent credit or down to a 75 cent credit for today. If I don't get filled in that range and it goes either above or out below it, it's either too rich or too poor, so to speak, for my tastes. All right. The adjust level would be, what's that, $1.70. I just double the credit that I took in, right? And then I probably, I'm sorry, the eject level. Did I say eject? I just double the credit that I took in, and that's usually a good rule of thumb for, hey, let's get out of this airplane. It's on fire. There's smoke in the cockpit, and my wingman's screaming at me to eject. Just inside of that, though, I don't know, around $1.40, I'd scratch my chin and go, uh-oh, Amazon's rallying. Should I adjust this trade? Should I roll it up a couple strikes for May 17 expiry? Should I just roll it out a week? Or could I do both? Could I roll it up and out? Okay, so those are the potential adjust tactics that we could do with that trade. Okay, all right, so I will grab a screenshot of this as well to show you what I just did, and then I will render this video and get it out to you. So great week of trading, great couple weeks, folks, especially in weekly options. We have been printing money in our weekly option service in some incredibly volatile weeks. We've been laughing about the lucky strike moments and the taking a couple shots at Jack to get through the week. But I jokingly say that. I don't. I believe our strategic mindset. I believe our commit criteria. So even in the face of, we talked about the Braveheart hold moments over the past couple weeks. They've worked out each and every time. So I'm having a blast here. Hopefully you guys are having a blast as well. Welcome aboard to a lot of folks that are taking a couple-week test flight. You're on board at the perfect time. We've been having a blast year to date. 2016 was our historic, our best performance since we started in 2010. I think 2017 is going to be even better, okay? And for all our trial folks, make sure you shoot an email to support@topgunoptions.com so we can blast you out text alerts. If you just signed up for a 2-week test flight, we don't have your cell phone number. I need you to email support@topgunoptions.com and go ahead and give us your cell phone number so you can start getting text alerts, okay? All right, folks, have a great rest of your day. Happy hunting. Make sure you hedge, and I'll see you guys next week.